Very, very good afternoon, everyone. Good evening. Charles here, FRGNT's daily chart analysis. I shall check the date, Thursday the 25th of June 2026. And of course, the time, it's approaching 25 minutes to 11 local time here, somewhere in Spain. So, I'm on vacation at the moment, so I'm off my main screens. Nevertheless, the show must go on. It's been a very, very, very good trading week, and I'm very thankful for continuing to work whilst being away from the office, away from the desks, away from the screens, and just trading in the mobile format, of which I should say is more of the reason why I suppose the majority are seeking to trade consistently to get away from the standard deviations that life offers when you have to work from a fixed location at fixed times. Nevertheless, I'm waffling. So, a very busy trading week thus far. I'm sure you can hear from my voice, absolutely exhausted, trying to have fun whilst also trying to manage trades, manage alerts, have a look what the DXY is doing. Anyhow, so I think I've given a breakdown on Gbpcad yesterday, but a quick recap. First position, that was break even. Second position, re-entry via the same 15-minute order block, lower time frame break of structure Gbpcad. We took a very small 3% out of the market there. And then today, that was the first trade of the day this morning, Gbpcad in relation to an Asia range FRGNT type of entry. Asia was available by the time the position was looking to be taken. Of course, I can see there's a clear break of structure on that 15-minute time frame. Let me point it out for you. You guys know I love a good illustration. Low in the market, price came back up. We made a lower low. That's the first criteria with Asia range, and Asia, of course, begins to print. And then as a result of price coming back into this area post-London, looking for that break of structure with Asia available, which corresponded very nicely indeed with the 4-hour 50 EMA. So it's pretty much a textbook position in terms of even where I should be looking to take profit. Of course, we're seeing the slide now on Gbpcad, but nevertheless, I think that was around about 2% out of the market, yet 2.4 minus commissions X, Y, and Z. So round that down to roughly 2%. So Gbpcad in total thus far this week has provided some good beans for us to just remember. Really, I think this is a great video. A lot, particularly on social media, is governed by results. But what people fail to remember is trading is investing. And sometimes your investments are slower to materialize than other dates. It's been a very, very, very slow year. And of course, when we have a look to see at the fundamentals that are taking place in the world, we can understand why it is a slightly testing period. But one thing that I am very transparent about is my results. If you were to go through my profile, you see an adaptation towards the start of the year where I was having a lot of break-even positions. And that was flagging up instantaneously on my journal. My trade volume had increased. I was taking an increased volume of positions, of which were just churning out break-even positions. As I was taking positions aggressively. That's the word I was trying to find. Taking aggressive positions, and of course, even the way that I teach, if you're going to look to take aggressive positions, you have, and I still stand by that. Of course, this is not financial advice. It's just what I do personally. If you're not waiting for clear breaks of structure, particularly on that 15-minute time frame, then I'm always looking to manage my position aggressively by way of the imbalance in the opposite direction of the trade. And what was happening was price was indeed touching the imbalance in the opposite direction on the lower time frames, meaning that my range was even smaller than it would usually be. I'm used to looking at going break even to 1 to 1.5, but as a result of taking aggressive positions on a lower time frame break of structure, then looking to manage that by the imbalance in the opposite direction, as I said, my range was incredibly small, having to go to break even early and then taking break even positions. So it's been a testing year is what I'm really getting at, and alerts are still going bananas at the moment. Nevertheless, one thing that I have always fallen back on is strategy, setup, entry criteria when to manage your trade, when to take risk off the table. That's something that hasn't and will not change for the foreseeable, especially as results continue to show themselves to me, that you just need to be patient. And if that's a good message to you guys as well that are struggling, or indeed you've just learned how to trade in arguably the most testing period of late, the only period that I remember even close to providing a little bit of upset would be if we say what's going on in Ukraine, between Ukraine and Russia, and prior to that, then of course there was the COVID-19 outbreak, but they were quite isolated. But what we're seeing here is, well, the DXY really governing, in my opinion, at first. Just to go off topic, this is probably the first trading year in 10 years, personally, that I'm seeing how tweets, social media is able to shake the markets the way that it does. Most usual news that would be coming out, NFP, that's not really doing what it used to do, in my opinion. Instead, tweets, however, are shaking the markets the way NFP would. And we would have notification, we would have a calendar when those economic events are going to take place. The downside is we don't have a calendar when those in particular powerful positions are tweeting, then shaking the markets, putting us to break even, and then even at a loss at times. So just stay true to your trading strategy, whatever strategy it is you're trading. I will always suggest that every strategy, if it's a well-known strategy, it most certainly works, and the only variable that is part of the reason why your strategy isn't working is because you're not being consistent enough with executing that on a solid basis. So, without further ado, that's Gbpcad. I hope that makes sense. I do love a waffle from time to time, particularly on better days, because it just goes to show that it really does work, but it does take dedication, patience, discipline, all of those buzzwords that I'm sure you've heard many, many, many times over. But it really is as simple as that, sticking to your strategy over and over again until you get bored, and until you've become rich enough and you just want to buy an island and live happily ever after. So that's Gbpcad. On to GJ. So yesterday, GJ, what happened with GJ? Well, GJ, we left, and GJ eventually reached that structure point today, the 25th by midday, and as a result of price then reaching that structure point, as I say, if you remember what I've just said previously, before I'll be waiting to take those lower time frame breaks of structure and then becoming or pushing myself towards break even by the time price got to the imbalance in the opposite direction, more so of which caused the most recent, in this case, would be what caused the most recent low in the market. If there are no EMAs to govern me to move towards break even, then for me, what I am seeing is, well, here is an area in the market that caused the most recent low. Therefore, that is the lower high in the market. Low created, confirmed. Therefore, this is a structure point, and until this structure point is broken, we are still bearish on GJ. Therefore, meaning that I need to see some form of confirmation on a lower time frame before looking to take a long position when price is most certainly bearish. As you can see by my illustrations, we have already come into that 15-minute order block, of which by my larger illustrations, I am expecting after this high in the market, higher low perhaps for a higher high continuation. So overall, I'm still very much so bullish on GJ, and you can see where I would then be looking to take perhaps longer term, higher time frame directional short positions on GJ from those higher time frame refined areas by way of 4 hour then 15-minute order block refine within there. So I've had that lower time frame break of structure on the 15-minute time frame. You can also see a very intricate break of structure on the 15-minute time frame as price came into the 15-minute order block. That, we must say, caused this high in the market. Of course, when price eventually then looked to return, I'm looking to see a break of structure. What do I have? POS. That illustrates we had a break of structure of some sort. So on the 15-minute time frame, it's very sizable. On the 5-minute time frame, frame, it most certainly was a break of structure, but it didn't then mean I take immediate positions. What you can see is when price came back, you can see another order block that I used, of which caused that break of structure that I'm looking to identify. And when price came back in, that was a buy entered as an instant execution, which I just left. And you can see that reached around about 2% there as we got to the structure point. Anyhow, then today, another fruitful day. As a result of then seeing that we have, if I take a breath, finally a break of that structure point, meaning that I now have that higher time frame, at least on the 15-minute, that I have the confidence that price is now looking to turn around. So not only do I have it here on an intricate level where I must now look to get break even by that structure point is now broken, meaning that we have now created a high. After a high in the market, I'm looking for a higher low for a higher high continuation. And that's exactly what we took out of the market. With that said, I only took 2% out of that again. Just stacking nice percentages as we go on. I can see that that's an equal high in the market. I'm not in the game really to anticipate higher highs. I understand that higher highs is likely to be created, but my goal is to use that as a confluence for price to want to push from my area anyway. So it's not necessarily me that's going to be in the market to hold this type of position. Particularly when I have EMAs restricting that anyway. But what I am able to do is analyze, well, if prices got to this area and made the first high, recognition of the most basic format of price action after a higher high, higher low for a higher high continuation, it is now stacked as a confluence that price should look to make an equal high at the very least. If I see that that equal high is worth something from myself in terms of risk to reward ratio by way of 2%, then again, an adaptation to my most recent trading strategy in terms of risk reward management, more often than not, I am looking to take 3% of the market. I'll certainly hold my hands up to that. But when I see very clear, easy ways to manipulate the market to gain 2% over and over and over again, it's not really my job to anticipate 3% coming out of the market when the market hasn't really shown me that it's going to move to the higher highs. It certainly shown me that it's going to move to an equal high, and as I've mentioned, 2% banking on your investment is very good, particularly if you're able to do that over and over again consistently. And as I've said, it's been a very slow year, therefore I'm quite happy to bank these amounts of profits as we start to move on into quarter three. So that's GJ today. So we've gone over GCAD, GJ, and then AU. I think we've just about got enough time for me to go over AU. So AU, very, very, very simple position, to be honest. We can see in the market that, and bear in mind, this is only on the 15-minute time frame, but I can see by my white scan box, we are in that daily order block looking for price to come out of the market to the highs. Of course, that doesn't necessarily mean I need to be taking an immediate position, but what it does mean, I need to find confirmation, perhaps if it's clear and easy, for me to take a long position to support that higher time frame directional bias. Now, by way of the 4-hour time frame, forget about that for the moment, but what you can see is that price was in a range. And at some point, we were looking to find where that range has been broken to the upside. And of course, the most basic format, we're ranging in the market, and then when price breaks out to, let's say, the highs, I'm looking for price to be driven all the way back down, find the imbalance that caused that higher high break of structure, and then look for a lower time frame break to look for that high to come out of the market. That's exactly what we had. We had a session low in the market. Why a session low? Well, we're failing to break those highs, but what you can see is price gently stepping up. Here was the first sign in the market, in my opinion. As I've said, I always ask myself, well, if I'm wrong, what's the other opportunity? It could be the range, but if I get rid of the range, what we see is perhaps the first break of structure. Why I didn't enter that trade beforehand? No 15-minute break, no 15-minute order block for me to select, such as this, for good example, that caused that price broke below it. Therefore, it was removed from the market. Now we move on slightly to a later date. What can we see? The second, perhaps, clue in the market. Price was failing to break above these areas. As I always say, one line more often than not will do it. Look at the red line. That's the highs in the market. We tried to break above, failed to do so. Tried to break above, failed to do so. Then we must understand what's price telling us. Break, pull back, and are we able to go now? So look to the left-hand side. Was there an order block? available. As well as that, we have, of course, those session highs on the lower time frame. You will find a 5-minute order block there by way of 5-minute gam box, and then trade was not executed by the time price came back to the 5-minute gam box. What I wanted to do was seek further confirmation. What do we have? It's price stepping up. We've now made a high, higher low, higher high. What am I expecting? It's the same old rinse repeat. After the higher high, higher low for a higher high continuation. This time, what's slightly different to the previous GJ is that our higher high actually brought us perfectly in line with the key structure point, in my opinion, that caused that most recent low in the market. Therefore, it's not for me to anticipate that. It was nice that price made the higher high, but I wasn't then looking to wait for price to make a higher low followed by another higher high. No, it's a key structure point in the market. I have now created that higher high, expecting a higher low for a higher high continuation, but that's not my game to wait for that. And as I said, wherever that lies, if I'm able to take good money from the market, then I'm definitely looking to close it out. So roughly 3% there on AUD US dollar. So as I mentioned today in all the groups, a very fruitful day, to be honest. Very, very simple day of trading. EU, no position taken. There you can see pricing come back to me. DXY was using that fully as confluence all day. GU, again, no position. Price didn't quite come back where I wanted it to do. I'd be happy to take GU if it came back to this order book, but it failed to do so. Therefore, I simply left it alone. In US dollar JPY, well, I am looking for potential shorts, but I'm just not keen on it at the moment. And as I always say, one line will often do it, and I don't really have that clean and crystal clear break of structure coming out from the downside to look for this type of scenario. So nothing there on UJ, and of course our beloved US dollar CAD. Nothing on US dollar CAD. You can still see my illustrations there, waiting for price to redevelop. I mean, I could have been a little bit more active on US dollar CAD. But here would be my key structure point, just looking at the optics. And then here, most recent high in the market. So therefore, that would have been the break of structure. And then perhaps after the break of structure, did price come back up to those highs? Yes, it did. However, after potentially having an entry like so, probably would have stayed in that with around about 20 pip stop loss, I'll be honest, on US dollar CAD. And that would have been a nice, fruitful day as well. So you can see how it all makes sense, guys. As well as that, got a nice break of Asia lows, pull back into their area. So that would have been a nice position. But as I said, it's been already a very, very fruitful day in the markets. And just as final note from me, to stay true to your trading plan. Don't be governed by your performance over days and weeks, more so months and quarters and years. And that's how you can really start to trade with absolute confidence, to recognize that it's not actually you that's doing anything wrong. And that reminds me, I need to do a video to address a good question I've had most recently about a particular trader contacted me and said, well, he hasn't changed anything, but why is his performance dipping? And sometimes you just have to ask yourself, well, what's going on fundamentally? And have I changed anything at all? I couldn't answer that question 100% before, because I had actually adapted my strategy to fit the circumstances that I felt that we had. Therefore, for me to be fully clear that it's not me or it's the markets, revert back to what you do best, revert back to your strategy, and then you know 100% that I am, or you are, acting in line with exactly what you should be doing. Therefore, unless your strategy is fully obsolete and no longer giving you performance, it's not necessarily you. But just make sure that you are indeed executing and managing and risking your positions in line with exactly how you should be based on your strategy. So I'll leave it there for now, everyone. Tomorrow is, I guess it's Friday tomorrow, so perhaps I'll be on the markets again, but I feel like after a good couple of days, in fact it's been a good week, maybe quit while I'm ahead and enjoy the last couple of days of my vacation before having to roam back to Italy, pardon the pun, to be trading from my house. So until then, team, all the very best. Good luck in your trading journey. And as I say, stick to your plan. It doesn't hurt to go over your strategy over and over again to double check that you are executing correctly. and stack the percentages in your favor when they're there in front of you. If it makes sense to close them, and I'm not a one-to-one trader, but certainly 1 to 2 with all the signs of confidence that I should be closing my position out by there. Price has now made that higher high. What am I expecting? A higher low. So would it make sense now to close my position? Perhaps, if it makes sense for you, and you don't want to sit in the drawdown or the pullback of that higher low as price then seeks to potentially make a higher high. Sometimes it makes good sense to take your money while it's there. Anyhow, it's not financial advice, it's just what I do. And as I always say, all the best in your trading journey. Do take care. Ciao.